Okay, so after you've done the accumulated fund and you've done the bar trading account, the next account is going to be your income and expenditure account. And your income and expenditure account is just working down through the items you have in your receipts and working down to the items you have in your payments, and then doing any adjustments if you need to do any adjustments. So with that then, your income and expenditure account, it's going to look like this. Remember, you put in your heading income and expenditure for Glen Tennis Club for year ended. Always put that in because you get marks for it. It's your income. So the first item we have here is bank. So if that already included, anyway, bank will never go into your income and expenditure account. Remember, income and expenditure account is like your profit and loss account. So your bank will usually go into your balance sheet and it's usually the bank balance at the end. That bank balance has been used already as part of your accumulated fund. Your interest from investments, so we have working done in that already. So we go back to our working and we have a look and see what we've done there. So we've got 2,000 for income and expenditure to go into your income and expenditure account as part of your income. So that's the total amount of the income that we have for income or for your interest, for your investment interest. So working one, 2,000. We work down then, so you got bar receipts. So you know we've used bar receipts already. So that's going to be part of your trading account. So that's going to be 32,620. So you're just going to put in 32,620 in there next. That's your second item. We've got catering receipts then of 12,700. So if you've got catering receipts, we must have catering expenses. We've got catering costs here then of 15,000. So if you look at it, we've made a loss on that. So we're going to leave that for the moment because that's going to go on the payment side. We've got our subscriptions then. So with our subscriptions then, we need to calculate what our subs are. So we're going to look at the start. If there's any subs due, you're going to take it away. Any subs prepaid, you're going to add it on because due is from the previous year, prepaid is for this year. You're going to look at the end of the year and see if there's any subs due or any subs prepaid. If there's any subs due, that's going to be added on because it's for that period. And any subs prepaid, you're going to take it away because that's for the next period. And then you're going to adjust your life membership is included in our subscription, so we're going to take that out. And our two levies then, we also need to adjust for that and take those two out. So your working for your subs is going to look something like this. So you got 84,000, that's taken straight from the question. So subs 84,000. We subs due at the start of the year, 5,000. So as we said, you're going to reduce it because that's for the previous period. We've no subs prepaid, so it's going to be 0 at the start of the year. At the end of the year then, we'll have a look for any subs due or prepaid. So you sub for 2011, so that's prepaid of 300. So you're going to add that 300 on. I don't have any subs due at the end of the year, so it's going to be 0. We're going to have to make a little adjustment then for these 3 new life memberships and the life memberships that's included in this. So if we look here, 2 life memberships, bringing the total to 10. So our life memberships at the moment is 24,000. So we're going to divide that by 8 and see how much it is per life member. So 24,000 divided by 8 will give you 3,000. We're after bringing on 2 new life members, so 3,000 by 2 will give you 6. So we're going to reduce the life membership by 6,000. However, here we might as well continue on and finish adjusting for our income and expenditure for life membership and also for our balance sheet. So our life membership was 24,000 to start. We have 2 new life members, so it's 6,000. So that gives us total life membership of 30,000. So they want to reduce that, or they want to write off the life membership over 5 years. So 30,000 divided by 5. So each year we're going to write it off and reduce it down by 6,000. So our income and expenditure is going to be 6,000. We're going to get an income of 6,000 from the life memberships each year. That'll be on the income side. And then the life membership then that we've left over at the end of the year is going to be 24,000. So our subs, 56,400. And then our life membership then is going to be 6,000. So in your income and expenditure account, you'll have subs 56,400, life membership 6,000. Let's see if there's anything else then to be included in. So you've got annual sponsorship of 7,500. That's just going to go in as it is. And then we sold a car, or we sold equipment, it cost us 4,000. We got 2,500 for it, so we made a loss on that. So we've got all our income. We're going to add them all up, and that's going to give us 104,520. Next thing we need to do is work down through our payment side. So remember, don't forget our sales, the loss that we made in this. So we made a loss of 1,500. So our equipment is going to be 1,500. So make sure you put that in first. Your bar purchases, we've that already used as part of our bar trading account. Sundry expenses, small little expenses that we can't to use one account from. They're so small there's no point putting them into account. And we usually link that up with our wages. So our wages are going to be an expense here. So our wages is going to be prepaid. So we'll have adjustment for that then. So the adjustment then for your wages or your sundry expenses, you're going to have wages, our amount 2,400. Wages prepaid is going to be 400. So that's going to increase it to 24,400. So you see your wages prepaid for this period, 400. Sundry, 24,000. So your wages then in your cumulative or your income and expenditure account will be 24,400. Repayment on the loan, so that's been done as adjustment already. So we go back to our workings and we go back up to the second or the third working. Here we are. So loan repayment, 2376. That 2376 should go into your income and expenditure. I think I had it in as a current liability, but it actually goes into income and expenditure. That's your interest that we have for this year. So we think to our profit and loss account with always put interest in at the end. So that 2,376 will go into your income and expenditure as expense. So we'll have loan 2376. The next item then working down, we've got equipment. So we've got equipment at a start of 75,000. We bought equipment of 8,000. And then we saw equipment of 4,000. So we need to calculate how much our equipment is, and what we're looking for is the depreciation. So equipment owned is the depreciation 25%. So the working for your equipment is here. So it's 75,000 at the start. We bought 8,000. So we look here, we bought 8,000, equipment 75,000. So you're going to add those two together to give you 83,000, and then we sold equipment then of 4,000. So the value of our equipment is 79,000. That will go into your balance sheet as your fixed asset. So 79,000 multiplied by 25%, so it's 19,750. That will go into your income and expenditure account, and will also go into your balance sheet as a fixed asset. And we'll look at that later on. So your income and expenditure will have equipment 19,750. Also here, it doesn't say here, but you need to have depreciation then of your clubhouse. So we keep those depreciations together so we don't leave it out. So if we look at our buildings, it's 250,000. It's 2% depreciation for buildings. We're just taking from here, clubhouse and court, 2%. And at start, your clubhouse and court, 250,000. So that's going to give you 5,000. That goes into your income and expenditure and also your balance sheet as a fixed asset. So that's your next item then, that goes into your income and expenditure. We've already included the loss in the sale. So just work down through each one of these items. Catering cost, we know there is a loss. So what caused catering receipts was 12,700. Our cost was 15,800, so we made a loss in it. So we're going to do a quick adjustment on that. So your catering receipts, 12,700. 15,800, so we made a loss of 3,100. So that's your next item that goes in here, 3,100. Then we have prize bonds. So prize bonds are a current asset. The reason why they're a current asset is these are bonds that we've bought, but we have them for the rest of our lives. So we'll have them until we actually sell them. So for that very reason, they're going to be an asset because it's stuff that we have, it's money that we have. So we skip that, we make sure to put that into our current assets later on. You got your coaching lessons of 3,500 and your travel expenses then of 10,000. They're going to go in as they are. So coaching lessons and travel expenses. You're going to add up all your expenses, and from your expenses then you're going to take it away from your income, and you're going to get 34,890. And it's going to be surplus income over expenditure. Okay, and that's going to be your heading for that. And we're going to use that later on in our balance sheet. So with that then, so your income and expenditure, you just work down through your receipts for your income, work down through your payments for your expenditure, your expenses. If adjustment needs to be done, you go to your workings and do an adjustment, and that's how you answer your income and expenditure account.